filter through the economy.
Quarters. Here's what's coming up on today's show. The 10-year yield hitting its highest level in almost 7 years. Todd Coleman of Ambrosino Brothers is watching us, going to give us a key level that says this could take down stocks. He's going to tell us what it is. Plus, Bitcoin falling this week, but one of our traders says now's your best chance to buy. He's going to give us the trade later on in the show. We're going to start first with the stock market, however. It made a little bit of a comeback after opening in the red this morning, but now we are back in the red, although ever so slightly. Jeff Kilberg and Anthony Grisanti, they are your traders today. Jeff, let's go ahead and start with you. Markets are tentative today. No big moves.
They are. I think it's a digestion period, Jackie. I mean, look, at the end of the day, we were anticipating the 10-year yield moving above that 3.03%, which we saw the high of the yield in April. Now we're up to 3.12, nearly trading 3.10% right now. So I think the market is really trying to take this all in. And it is possible for the stock market, interest rates, and crude oil to all go up. We talked about that on the show about a month ago, and right now we're experiencing that. However, you are seeing some tentativeness, specifically in the volume in the S&P 500.
Grizz, do you agree with that? Do you think all three are going to move up together, or something's got to give here?
I think something's going to give, Jackie. I think that crude oil is actually going to take a little pause, as I discussed on the halftime report. But, you know, I liked the stock market about 100 handles ago in the E-mini and around the 26.30 level. Now that we're 27.30, I'm a little tentative on this market, as traders are today. I looked at Japan, first contraction in their economy in the last 9 months. I'm looking at other factors. I think the market is a little overdone right now to the upside, and I think traders, as Jeff said, have to get used to higher interest rates, and that's the discovery phase we're going through right now.
All right, for more on the markets, let's bring in our next guest, Larry Glazer, managing partner and portfolio manager, sorry, Larry, at Mayflower Advisors. Great to have you on the show. Good to see you.
Great to be with you.
So your thesis basically says that rising inflation could have a big impact on the bull market here. So explain to us how that works.
Sure. Well, I think the traders make a great point, and there's been so much change in the market with respect to soaring crude prices, with respect to plummeting unemployment, and with respect to maybe a change in inflation expectations. Look, this big change in interest rates needs to be digested by the market, no doubt. And the Fed is taking a change in its attitude as to how it will view and tolerate inflation. But look, there are some inconvenient truths that are emerging in this market right now, and it's going to cause investors to change how they position their portfolios going forward throughout the rest of the year. Those inconvenient truths include the fact that when you have this plummeting unemployment rate and you add in the biggest tax stimulus in 3 decades, it's ultimately going to lead to higher wages and potentially inflation. And that's something, as a small business owner, we're beginning to see that. We're beginning to see wage pressure emerging in the economy. Even though it didn't show up in the data in the last jobs report, that's lagging data. It will show up in the months ahead. It's the same issue with crude. It's going to begin to filter through the economy, show up as an inflationary issue. Hey, it's great when energy stocks move up and they move the Russell small cap, but when it starts to affect consumer behavior, retail sales have been great, no doubt. It will begin to affect consumers as the summer driving season kicks in, unless crude backs off here.
All right,
so I think
Larry.
these are all inconvenient truths. Yes, Jack.
Thanks. How low could we go?
Well, I think we're in for this bout of volatility, and for investors, it's about repositioning portfolios, recognizing the new paradigm, recognizing the generational shift. So when you think about it, you want to position away from some of where the fund flows have been, some of those mega cap index names, some of the large cap growth, go into value names that historically benefit from a soaring dollar, from rising rates, from rising energy prices, but have ironically lagged in this market. That's where the market's been a surprise. Here you get a chance to buy an area that's lagged for the last 10 years, offers real value, and benefits from these market conditions. Financials have lagged year to date despite the rise in interest rates.
Okay.
So I think there's a lot of opportunity to reposition the portfolios, Jack.
Let's talk about specific areas. Give me some sectors.
Yes.
Tech's been really hot. Do you think it's going to stay on track?
Sure. Again, we talk about that irresponsible indexing phenomenon that has gripped the market, and that tends to drive the S&P disproportionately large cap growth names. So it leaves an opportunity, not just in small cap names that we talked about, not just in small cap value names, even in the commodity space where our traders, I know, spend a lot of time. Commodities less indexed. It's the road less traveled. That's where we want to be here. Tips, again, reflecting some of the inflationary concerns. I think there's a lot of opportunities here away from those FANG names, away from the mega cap names, into some of these areas that just haven't had the love, Jackie. They've been left behind in this market. We're going to go from the superstar market to the team player approach, where the market broadens out. It's much healthier for investors. It's a much safer place to invest in the future.
We're going to spread the love, Larry.
we're going to spread the love.
Jack's going to jump in with a question.
Hey, Larry, great for coming on the show. We appreciate that. My question is, you see wage inflation. I don't necessarily share that same view, but the wage inflation that you talk about coming, how is the Fed going to react to that? Is it they can become more hawkish and more aggressive in the rate hikes? And what will that do to the short end of the curve as well as the 10-year?
Yeah, Jeff, no question. Look, we haven't seen it in the data. You're right. I mean, it hasn't showed up, and we think the data is just lagging. It hasn't filtered through. With tax cuts, look, it's the gift that keeps on giving. So eventually it shows up. This is a long-term tax stimulus. So I think it's going to show up in wages increasingly. You're seeing positions are tough to find. It's going to eat into corporate profits. The short end of the curve is actually really attractive right now because it's moved up a lot, and that's why you have that flattening yield curve. So for investors, a 2% money market sounds really great, and it's actually outperforming a lot of areas of the stock market year to date, and certainly most of the bond market. So I think there's lots of opportunities in the bond market, given you've had this. Go ahead.
Well, no, Larry, my only point is if that short end of the curve is so attractive, that's my biggest fear, is that, we see that curve really get out of sorts and that narrowing of the long end of the curve. And if we see that short term really move, that is going to make people reposition, to your point, and react. And that curve flattening is really going to hamper a lot of people's stock positions. So it's all one big circle we're looking at here. But what are your thoughts about the Fed actually maybe going 2 more times this year?
Yeah, well, certainly I think the Fed has the green light right now to raise rates. And the question is how much, how far, how fast. But, I think as you talk about, it is this big circle. What's really surprising is if you look at the really crowded trades coming into this year, financials, no doubt, very crowded. Everybody knew rates were going up. You had the green light. It was going to happen. Financials underperform other areas. Small banks, ironically, doing much better than the financial sector as a whole. But also emerging markets. Again, that's where the pain is starting to be felt, right? Emerging markets don't benefit from the stronger dollar we're seeing. They certainly get hurt, and they don't benefit from rising rates. And I think it's the same true of the REIT sector. So you're starting to see evidence that those things are affecting certain areas.
Are you a stock or an options trader that is absolutely fed up with ordinary results? Are you ready for your breakthrough? I know how you feel because everywhere I turned throughout my trading journey, everywhere I looked how to produce phenomenal results within a short amount of time, everybody was telling me, no, it's not possible. It's not real. It cannot be done. So I got fed up. I discovered the 5 core fundamentals that helped me turn $12,000 into $466,814 in less than 7 hours trading options from my laptop. I know this probably sounds unrealistic to some of you, but the truth is I did it. I will share with you in this interactive video course specifically everything, every single detail, every action, every stock that was traded. As a matter of fact, I'm sending you my brokerage statement listing every trade that was taken that day. I realized one thing when I accomplished this is that I wish I had someone years ago when I was starting my trading journey and throughout my trading career that has shared these 5 core fundamental principles with me, because that would have saved me a lot of headache. That would literally save me a lot of heartaches, a lot of lost and suffered relationships. That would have saved me a lot of losses. That would have saved me a lot of time from discovering all these answers on my own. This is what you will be able to learn from this interactive video course. Secret number 1, discover the best stocks for trading options. Secret number 2, discover the top 3 best chart patterns for huge returns. Do you struggle with the decision, should I sell now or should I wait? And sometimes when you make a decision, do you see your profits vanish, or do you drown in the grad when you get out of the position just because you see how much money you left on the table? Don't let this ever happen to you again. Secret number 3, discover the key to locking the gains. Secret number 4, knowing the trend will make you money. Discovering the TRO versus the trend will make you a fortune. Secret number 5, the holy grail of all secrets in trading. Timing. Can you only imagine if you knew specifically on which days to trade and on which days to go fishing and enjoy life? And the secret number 6, the truth behind of how to trade the news that will take all the guesswork out of the equation and will help you trade with great confidence and extremely high probability. Today is your day. Are you ready for your breakthrough? It is very simple. Go to marketcrash.money/500K. Click this big orange button and say, yes, set me free. Take action now.
This is going to jump in real quick.
Yeah, Larry, you talked about the consumer, and that we haven't seen the tax reform benefits yet. I'm looking at crude oil. You mentioned that, but really, we're talking about gasoline prices, Larry. They're approaching $3, and that's eating into that tax cut, right, or the tax benefit right now. So, Larry, what point do we get in crude oil prices or gasoline prices that you think it really affects the consumer? 25 cents higher, 50 cents higher from here?
Sure, you're starting to feel the pain, and I think you're running the risk right now, as you mentioned so clearly, that you're going to negate the tax benefits from the consumer standpoint, not necessarily from the corporation standpoint, so companies are still well positioned, but consumers are going to feel the pain. And again, consumers, 2/3 of the U.S. economy. If the consumer is worried about filling their tank and they don't want to go on the road trip, and we're projected record road trips this summer, it's going to be an issue for the broad economy. So the timing of this is really critical. We have to see what happens with the geopolitical events, how much Iran really takes hold. But we're in a heated summer season where geopolitical events could have a dramatic impact. That's one of the reasons we still like small value in the U.S. Again, more of a domestic focus, away from some of the dollar concerns, less exposed to some of those geopolitical events overseas. Again, that trade is also getting a little bit crowded, so you look for a pullback to really get excited about it.
All right, Larry, great to see you as always, and we wish we were drinking the coffee you're drinking. That energy. Okay. Let's get straight to it. Jeff, you're trading the S&P for us. What do you think on a day like this?
Well, you have to have a little poise. He's got a lot of caffeine in him. But right here, I'm looking at the S&P 500. We've seen a lot of oscillation, up 10 handles, down 10 handles. It was down overnight. But I want to be a patient seller here at 27.32. Due to the fact that 10-year above 310, we haven't seen the stock market go back under 2,700, so I think it's time for that to happen short term. So I want to look for a sell at 27.32, looking for 27.12 as my target, but I'm being very mindful as 27.40 has been a really good resistance for us in the month of May, so I want to be stopped out at 27.42, just 10 handles higher, Jackie.
What do you think of the trade, Grizz?
Actually, Jackie, I love selling the market. I think buying Red Bull would be good right now because Larry seems to be a big buyer of that. But you know what? Jeff picked actually the perfect levels right here. 27.40, I was going to say, is the resistance. So he's got his stop in the right place. I think he's right. This market is due for a little bit of a pullback. We've had a nice 100-handle run over the last week. And I think that the data itself and some of the news coming out justifies a bit of a pullback.
Okay, let's get the risk reward on this trade. Guys, they're in agreement. Jeff is selling the S&P 27.32, targeting a move down to 27.12. Each point, $50, risking $500 to make double that on this trade. All right, let's move on. Watching the 10-year planting itself further north of 3% today, 3.1% last I checked. Our next guest says that one key level for yields could turn them from stock market pest to poison. Let's bring in Todd Colvin of Ambrosino Brothers. Todd, great to have you.
Thank you for having me on today.
All right, so at what point are these rising yields going to put pressure on equities, have a chilling effect on stocks?
Well, I think we're already seeing that. You've seen, obviously, equities, while they're up this last week or so, they aren't seeing those extensions into all-time new highs. We're not hearing all the bells and whistles go off on our machines over the last, say, several months. But if you look at right now, 3.25 in the 10-year, I think that could be the level where we see a sustained trade sideways, not only in 10s, but I think you start to see some of that money leaving the stock market as opposed to just cash sitting on the sideline, not entering the market. And ultimately, I think that is going to come. It's not going to come today, and it's not going to come tomorrow. But what it will happen is, as we get near to the FOMC, how will new chair Jerome Powell, what is his message going to be to the market? Because right now, 2s, 10s are off their ultimate low from last week. But I still think the Fed is very uncomfortable about the high odds of the probabilities of a potential inversion there, and that is something they are watching very closely.
All right, two things real quick. 3.25%. When do you see that happening? And what are you expecting from the Fed this year in terms of number of rate hikes?
Well, I think right now 3.25, we're on a path there, so we could get there prior to the June FOMC. I don't see us getting above that June FOMC in the middle of June, so we have a little bit of time between now and when we possibly could get there. As for the Fed, right now we had one rate hike in March. We're going to get another one in June. I think right now, while the market is pricing in a potential for a third and maybe a fourth, there's a maybe there for the fourth, I think the slate is pretty clean here. Because while you have inflation and jobs numbers that are very Fed-pleasing, you got to watch out for that growth number, which is expected to be somewhere in the 3% range. But we haven't seen one of those in a while, and we need those tax cuts to feed through, something that your previous guest mentioned we haven't really seen yet. So will we get 3% GDP? That could be the Achilles heel of the Fed, raising rates higher than they or more than they currently want to.
Okay, Jeff?
Hey, Todd, great to be here. We're both here in Chicago, so I want to ask you a quick question. Are you surprised in the way equities have really taken in this higher moving rates? We got above that 3.03% high yield of April, and now it seems like we're off the races. A lot of selling pressure in the futures prices, rising yields. Are you just surprised that equities have not really retraced? And obviously, 3.25 is only 10 basis points away. Is that really going to be the aha moment that stocks start selling?
Well, I am very surprised. Historically, the relationship between bonds and stocks is a little bit more, inverse. And I think that right now you've been drinking the Kool-Aid really since 2009, and you haven't lost and hadn't had to sustain any losses in your equity. So why change it? Don't fix it if it ain't broke. And I think right now, as we get to 3.25, I don't know if that's the aha moment, but I do think that short-term yields are much more attractive than an equity market that could potentially fall off the cliff if we do start to see money leave the equity market. I think the lack of rising in equity prices today is because new money's not coming in. It's not because existing money's coming out. But that day will come if yields if you get to that turning point, yields are gonna force people out of the stock market. The risk levels are just so night and day, and mom and pop savers who have been punished over the last 10 years will look for the treasury yields to give them what they've wanted all along, and that's higher returns without the risk.
Grizz?
Hi, Todd. Welcome to the show. Todd, I saw that the last 10-year auction, the bid to cover ratio actually had dropped a little bit. Can you explain why that is significant to the viewers that don't know it? And if that continues, what are the ramifications of that?
Well, let's just make the one thing clear. The Treasury auction sizes aren't going down anytime soon. In fact, they're getting more. So the Treasury is going to be issuing more 10-year note Treasury notes as the quarters go on to pay for whatever the infrastructure plans, the tax cuts, whatever it's got to fill the hole for. And we need to see continued demand for those. Otherwise, you're going to have to see a higher yield to attract those buyers. So while we have seen sustained bids from the indirect bidders, which is foreign central banks, we need to also see those that bid to cover continue to stay high, or else you're going to see yields go higher given the greater supply for lack of demand.
Todd, thank you so much. Great to see you.
Thank you very much.
We'll see you again soon. Grizz, let's get straight to you because you're trading the 10-year note for us out of that interview. He says yields are going up. Are you a seller?
Jackie, I think ultimately they are, but I believe they're going to take a little pause, and this is futures now, so that's why I'm doing this trade. I'm looking at the June. I'm looking to buy it at 118.14. I put in my stop at 118.03, and I'm looking for a move to 119.14. And the pattern has been in the 10-year that the rates do make new highs, but then it starts backing off, consolidates a little bit, then makes new highs. I'm looking for the back off right now only because that's been the pattern.
Jeff, do you agree?
I do agree, and it's been a pretty orderly sell-off, right, Grizz? We saw just some consistent sell-offs and the yield slowly move. We didn't see an absolute blast. You didn't see stops come into the market like you typically do with a new high in yield or a new low in price. But this makes a lot of sense and certainly lines up, Jackie, and coincides with my S&P trade. When you see a little selling pressure or a little bit of profit-taking in this phenomenal run for the last 7 trading days in the S&P, they do go into a higher-yielding product like the 10-year. So, yes, I'm with you, Grizz.
Okay, let's get the risk reward on the trade. Grizz is buying the 10-year 118.14. He's targeting a move up to 119.14. In this trade, he's risking 300 to make 1,000 each tick, 31 1/4. All right, let's end the show with Bitcoin today down over 3% just this week. But Jeff, you're buying it here. What's the trade and why?
Well, Jackie, I didn't have a lot of love on Twitter when I was shorting up at 9,500, but here and now, this is futures now. The opportunity is really interesting. As we saw Consensus 2018 happen in Manhattan, there's Lamborghinis parked everywhere. You would have thought there would have been a little bit of a spark, a little bit of buying interest, but I'm being patient here, and I think it's an aftermath. I think we saw a meteoric rise above 7,000, 8,000, 9,000, and now it's just the trading range. So I want to be a buyer here at 8,000. I want to be patient. We know Bitcoin can really move around. And remember, folks, this is the one coin contract, the CBOE contract, but I want to be a buyer at 8,000, looking for a $1,000 move up to 9,000, but being mindful if folks continue more on the downside, I'm stopping myself out at 7,500.
Grizz, what do you think? Can you get behind this?
Jackie, I do. I like this trade. We're 3 for 3 today here, Jackie. I do like Bitcoin.
Well, I know you like Lamborghinis.
I was going to give the Royal. Yeah, that's right, Jeff. Well, you know what? I was going to give them to the royal couple if I was invited to the wedding this weekend, but looks like I'm not, so they don't get their Bitcoin gift.
They must have just forgotten
Jackie,
you on the list, Grizz.
Yeah, I'm still looking. Happened. I moved recently, so maybe it got lost in the mail, Jackie. But I do like
Grizz,
the
I'll send you a selfie.
So
thank you very much.
All right, so you like the trade. Do you think we can go higher from here? Just give us a little more color on your view.
Well, Jackie, number one, the market, we did expect, the consensus meeting was this week. We did expect the market to pop a little bit higher. It didn't do it, but it actually has held that 8,000, that 8,300 level pretty well. There has been some pressure. I see today it's up a little bit, so I think that's your support right there. You know what? If you get a little dip down, Jeff will get filled on his trade. But I think right now that with the hedge funds coming into the market and other interest in it and the volume growing, you're going to see more traders come into this. So I like this by the way, or
okay.
where it is.
Grizz, final word to you? Jeff, it was your trade. Final word.
Well, I think the final word is that the cryptocurrency conversation, if it's Bitcoin, Ethereum, what it is growing. And we haven't seen any true regulation come in the last week or two, so therefore it's positioning for a little bit of a pop higher. See some new buyers come in, maybe once those Lamborghinis get put back in their stalls.
All right, let's get the risk reward on the trade. Jeff is buying the CBOE Bitcoin futures at 8,000, targeting a move up to 9,000. In this trade, a contract is $8,000, so he's risking 500 to make 1,000 on the trade. All right, that's going to do it for today's show. My thanks to Jeff and Grizz. Meantime, you out there, if you missed anything, head to the website, futuresnow.cnbc.com. Everything is there for you, and it's all on demand. For the latest headlines and a sneak peek of what's coming up on the next show, be sure to sign up for our newsletter.
Are you a stock or an options trader that is absolutely fed up with ordinary results? Are you ready for your breakthrough? I know how you feel because everywhere I turned throughout my trading journey, everywhere I looked how to produce phenomenal results within a short amount of time, everybody was telling me, no, it's not possible. It's not real. It cannot be done. So I got fed up. I discovered the 5 core fundamentals that helped me turn $12,000 into $466,814 in less than 7 hours trading options from my laptop. I know this probably sounds unrealistic to some of you, but the truth is I did it. I will share with you in this interactive video course specifically everything, every single detail, every action, every stock that was traded. As a matter of fact, I'm sending you my brokerage statement listing every trade that was taken that day. I realized one thing when I accomplished this is that I wish I had someone years ago when I was starting my trading journey and throughout my trading career that has shared these 5 core fundamental principles with me, because that would have saved me a lot of headache. That would literally save me a lot of heartaches, a lot of lost and suffered relationships. That would have saved me a lot of losses. That would have saved me a lot of time from discovering all these answers on my own. This is what you will be able to learn from this interactive video course. Secret number 1, discover the best stocks for trading options. Secret number 2, discover the top 3 best chart patterns for huge returns. Do you struggle with the decision, should I sell now or should I wait? And sometimes when you make a decision, do you see your profits vanish, or do you drown in the grad when you get out of the position just because you see how much money you left on the table? Don't let this ever happen to you again. Secret number 3, discover the key to locking the gains. Secret number 4, knowing the trend will make you money. Discovering the TRO versus the trend will make you a fortune. Secret number 5, the holy grail of all secrets in trading. Timing. Can you only imagine if you knew specifically on which days to trade and on which days to go fishing and enjoy life? And the secret number 6, the truth behind of how to trade the news that will take all the guesswork out of the equation and will help you trade with great confidence and extremely high probability. Today is your day. Are you ready for your breakthrough? It is very simple. Go to marketcrash.money/500K. Click this big orange button and say, yes, set me free. Take action now.